Okay, guys, thank you for joining. And this is the first ever live stream from our Gamma Optimizer website. So this is like a great moment, moment to write down in history as the first live video. Welcome to all of you. I hope you are hearing well and looking at the screen. And the screen is supposed to have only like a little slide that lists the official open positions that we have right now. So let's start. So let's summarize this week. This week was a very active week, and we did a bunch of stuff, but the market didn't cooperate. I mean, the market didn't move. It only started to move a little bit today towards the end, just before the weekend, I guess, in anticipation of the French elections to be over on Sunday. But so far, this is what we have. We have an XPX vertical put spread for May 31st. This is not quite an official position. I mean, this is something that I designed for you guys, and I noticed that a lot of people started entering into the put spread. It was supposed to be, we were supposed to wait until the market hit a little higher, but well, it's a good way to play downside, and it's a cheap way to play downside. It was around 80 cents when I posted. I guess today is a little lower because the market is going up. So for those of you that want to play downside next week, this is a great opportunity. I can show how it works. I mean, the performance of the vertical is very simple to figure out. So for that, I'm going to show you here in the Thinkorswim, which is an easy platform to set up. So let's switch to Thinkorswim right here. And in Thinkorswim, I'm going to look at that particular vertical, which, wow, this is really cheap right now. It is 55 cents. So this is kind of the vertical spread here. Let's try to compress this a little more so you can see. Thinkorswim does a decent job of modeling the position. If you guys don't use this tool, you could, it's free, or you can open an account with the guys, or you don't have to have lots of money there. I always keep like $100 in this account just to use Thinkorswim. So this vertical put spread is 55 cents, and it pays a lot of money if you go into it. I mean, it pays $5 total. So it's a nice profit, like $4.45 profit if you go into this, and if the market, of course, cooperates and moves down. So for those of you that know me, you know that I never let these put spreads expire. So what I do is usually when they touch one of my strikes, the 45 or the 40, I start looking at closing it. Thinkorswim models this in a very interesting way. The 45, it says that it is a profit of 1.2, 1.3. In real life, if the SPX moves down, you are going to see this vertical around 2.5. That's what you will see, depending on how fast we move down. So Thinkorswim doesn't model it correctly, but if you are in this particular vertical put spread, you will expect at least to make $2.5 if the market touches 2,340, 2,345 before expiration. And if the market drops way below that, then you could leave this thing until expiration. So that's kind of the first open position, and there is still time to get into it. I know hopefully the war won't end next week, and on Monday we'll still have a chance to enter if we get another push towards the target that we want. So that's in terms of XPX. In terms of GDX, so GDX is something that has given you guys, or given us, a lot of trouble. I guess people on the EWT room have been waiting for this mythical wave 3 to happen since more than a month ago. I just lost track since when I remember starting designing this kind of trade really early this year, like for a potential wave 3. It has never shown itself. Maybe it will this time. So because of that, because of the uncertainty of a wave 3, we decided to play GDX with a calendar spread. And this calendar spread is between for the months of I wonder why I put June. It's actually July. Well, the beauty of live editing is a calendar spread between July and September, and the strike is 27. This calendar spread is actually really good. I like it a lot because it's very cheap. It was 20 cents when I posted this thing yesterday. I guess some of you could have even gotten even cheaper than 20 cents. And it's a beauty because it only requires GDX to go above 22 for the whole calendar to switch short gamma, which is fantastic. I mean, if the calendar switches short gamma, this is going to be the payoff. I'm going back to Thinkorswim, and I'm going to use this calendar here. So it's 24 cents today, the calendar. It's still doable. I mean, you guys are making some money. The people that enter to the calendar are making some money. And for those of you that want to enter, it's still decently priced. How the calendar works. So again, Thinkorswim does a decent job of modeling the position. It's not quite very accurate modeling, but good enough to get an idea of what this thing does. Let me just move it here a little, compress a little more this so you can see better. So this is where we are right now, and I always get the colors confused. I think this line is magenta. So the magenta line is the unrealized profit you'll get day after day. So you notice that if GDX moves up, you will get a nice profit here. So if it touches 27, well, that will be a fantastic profit. You're going to profit almost more than 100% that you spent. Now you spent like 240 bucks on this, and you're going to get 293. But of course, this is if it happens tomorrow. In this kind of positions, because it's a short gamma position, the longer it takes for the move to happen, the better for us. We want this thing to happen slowly. We don't want GDX to just go to the moon. So if you are in this calendar, it's a matter of patience. Now it's a matter of, okay, 22 is kind of like the first step. If we clear 22, we are in the right path. And also, if we clear 22, this calendar will actually make money every day that passes. Even if GDX doesn't move at all, the thing is going to start making money. And also, if by July, which is kind of like an optimistic, well, no, not that optimistic, let's say kind of pessimistic or neutral projection, if we hit 27 by July, you will notice that thing is gonna profit beautifully. Let's say middle of July. You think that you're going to have probably 75 cents of profit on this thing. It's almost 3x. So I like the calendar a lot. It's one of those trades that I like a lot. And it's easy to put on. It doesn't require margin in general. The only risk that you're assuming is the premium pay, the 24 cents. And if the thesis actually happens, it's a good way to play it. The main risk of this position is that GX doesn't do anything. I mean, it really doesn't move from this area, doesn't go above 22, or even worse, it comes down. So you have to know your stops. I guess the stop that I suggested was 20, because the loss at 20 is around 10 cents. It's not a big loss. A big loss is something manageable. So it's kind of a nice risk reward, and also it's for us. Now, if GDX moves below 20, I don't know, that thing will go to 0. So I guess it depends on your thesis. Do we have a bottom? Do we have a bottom here? This is the area where we're going to bottom, or we're going up. But this is a good speculative way to play it. And because this is live video, I am going to if you have any questions so far, just type on the live chat. That's a good way to interact in case you guys have questions. So let me know if you have any question about this GDX position or the SPX position that I just explained. And then I can move on. If there are no questions, well, fine. But I know that there is a delay between my video and what you get, so it's probably like 40 seconds round trip. So let's see if in 40 seconds I get a question. I'll keep talking, but if you have questions, just let me know, guys. So this is so far what we have for GDX. There might be some unofficial positions. I don't know. I mean, people request that I design trades all the time, and I post those designs, and but I don't track them. No, those are for whoever requested them. This one I am tracking. This is something that I'll be tracking. Yeah, the GD. Okay, that's a good question. If I like the GDX24 fly, well, the fly is a good way also to express bullishness. So let's look at here. We can create it quickly here. Let's create the butterfly. I think the butterfly was 24, 20, 28. If you're watching this, you can tell me this is the correct butterfly or not. I think it is. So it's 158. So it's kind of, it is a nice butterfly because right now the butterfly is at the, is a nice point. You know, it is kind of inside the body of the fly. That's where GDX is right now. So notice that if there is massive move, you're going to get lots of profit in that fly. You know, if GDX actually moves up, you're going to get really good profit. The only problem right now is that because it has so much deltas, you know, it has like 64 deltas. So because of that, you're also going to get killed if the thing moves down. So the fly is good. I mean, the fly is very aggressive. It's a very aggressive way of playing upside in GDX. So I guess it depends of how aggressive you are. I don't know if you remember, these flies had some stops, and we are way below the stops that I defined when we open this. But if you still have them because you missed the stops or whatever, then I will say that if your thesis is bullish and you think that GDX can go up a few points in 21 days, then you'll manage to come out with some profit and also, or even break even. Right now the fly has positive theta. This is something that Thinkorswim does really well. So because theta is positive, this is an area where the fly actually will be positive for you guys if you for some reason are still holding into this. So you could give it a couple more days, because every day that you are giving, then the fly is making some money, not a lot of money, but it's making, you know, something. so with theta positive is good, but also watch out because it is very aggressive at this time. Any more questions about GDX? While you type questions, I'm going to move briefly to other positions that we have open here. So let's see, what else do we have open? Oh, we have a TLT fly, which is kind of a roll continuation of the previous one. Which, by the way, you know, if you guys had kept that, well, if I have kept also, I was also in that position. That has been a fantastic fly. That thing is probably 2.5 today. I forgot how much it is today. The original fly, the one that expired today. So that was a great idea. It was a great trading suggestion. It was not my original idea. I mean, the thesis was not my original thesis. The butterfly was my idea. So this is kind of a replacement butterfly. I don't know if you guys are on the TLT and the new one for May 26. It's kind of the same thesis. It's bearish on interest rates. You think that basically that the 20-year treasury bonds will fall in price. That's kind of the thesis for this trade. And the fly right now is decent to enter. If you are not in the fly and if you really want to play downside, that's a good way to play downside. I don't know if you are interested or not, but I mean, if you want to play interest rates and your thesis is that we are going down, this is a really excellent way. I have it here, and it's 67 cents right now. I forgot what was the original price. If someone remembered the original price when I suggested, just let me know. But I think it was around here. I think that a good entry price for this kind of flies is 60, 65. You know, this is a nice entry price. It's a very aggressive fly too. If it hits 118, the profit is almost 100%. If it hits it tomorrow, no. Of course, every day that passes, the fly makes more money. But it's a very aggressive fly. I mean, in the sense that right now it is long gamma, so theta is negative right now. So it loses value with time, but it exposes you to a good downside profit. But I don't know what is the current thesis in interest rates. I lost track of this. I posted the trade for those of you that wanted to roll the previous one, but I am not following this one. This one I am not following that much. I should keep it a closer eye on this one. And so, and again, it's cheap enough to enter if you think that that TLT will go down. If that's the main thesis, I know that Xenia covers TLT, so whatever her views are, I think they're a good reference point for the trade. Let's see what else we have here in terms of trades. We have the VIX call spread. So this is what I call an end of the world play. This is incredibly cheap. We managed to enter this thing at 10 cents, like 11 cents. It's just cannot get cheaper than that. And the idea of this play is that something will happen next week or the week after. The volatility has been so low that something has to happen. So that's the whole point of the call spread. I mean, the whole point is to make it pay really nicely. It will pay $1. Yeah, so it's like almost 10 times the cost. So we'll see. The call spread. The best moment to enter was yesterday, and even today a little bit. I don't know over the weekend. I don't know what will happen in the French election. If nothing happens over the weekend, then on Monday we'll have to make a decision. If this is still a good trade to hold, or if you can enter. It might be a little cheaper on Monday depending on what happens on the weekend. And again, guys, if you have questions, just jump in, because you know that there is a little 20-second delay. So just jump in the questions. I am keeping an eye on the chat to answer them. And I think that's it in terms of official open positions. If you have a position that I don't have listed here, just let me know. Just ask me a question, let me know, because this is kind of the thing that I'm tracking right now. Those are the positions that I'm tracking. Of course, we have a couple more that I plan to put next week once we finally hit that 4,000, the 2,410 or 2,420 SPX. Once we hit that thing, I'll be happy and I'll start new positions. So the two positions that I have in SPX are a butterfly to play downside action. This is the butterfly that I have in place. It's a very nice butterfly because it has, look at how, like, max gain is around 2,310, but we are going to close it around here, 350, 340. It is a very nice. Butterflies in SPX are amazing ways of playing downside. They don't work at all to the upside, but they work beautifully to the downside. And I noticed the price is 460 today. It was around like 590 when I posted it, so it's getting cheaper and cheaper as we approach our mythical level. So I plan to enter this fly around 4 or 390. This is kind of where I plan to enter the fly. Once it comes down to 4 or 394 is kind of the best moment to enter. And then a user of the room gave me a good idea to have a risk reversal, but this is a short risk reversal in SPX. I posted it this morning. Now we get paid 95 cents. I mean, almost $1 to enter the position. And it's also a good way to play downside. And the difference is that we also get paid to wait. So notice the cyan line is the line at expiration. If XPX actually finishes below 2,350, you make the full gain. You make all the money, almost $6,000 in this position with 10 contracts now. But if it doesn't happen, if nothing happens, if it stays in this region between 2,350 and 2,420, then the position expires and all of the legs of the position expire out of the money, and you get to keep the 95 cents. That's a lot of money. I mean, that's the $950 that you get to keep if nothing happens. So it's a very interesting, attractive position. I'm kind of keeping an eye on this. Next week it might go to 150, probably 160. You will hit our upside target. The only drawback, is that it is exposed to upside risk. So if SPX goes up really quickly, this thing is going to underperform. But it's a nice trade. I'll explain it more next week if we decide to open it. I posted it today for some of you guys, for those of you interested on keeping track of it. And it could be a good way to play downside, just in case we get a very shallow retrace. We don't get the massive downside we're expecting. So this could be a good way to play it. So now let's move into volatility things. Let's do this quickly, because I know you guys want to go home or relax for the weekend. So let's look at the volatility picture right now. So what we have in volatility is the following. Well, this is the gamma imbalance. Let me show volatility. So nothing is happening in volatility. Really, the market is not pricing anything for next week. It's not pricing anything for the weekend. It seems that the French election is not going to happen. It's only not even 13 balls here. No, it's this is nothing for next week, and the curve is really low, and it didn't even go up compared with yesterday. There was not that lot of movement farther down the curve, so nothing is being priced. But that's why I don't have a volatility play for this election, as opposed to 2 weeks ago that we have a nice juicy volatility play, because there is no way to play. There is nothing to play. The only play that we have is probably the VIX collect spread, which is in the remote case that Marine Le Pen gets elected, then I will bet that VIX will go really high on Monday. So that's the only thing I have on. I don't have anything on the short side. And in terms of gamma imbalance, is something that I do all the time. If you don't know what gamma imbalance is, just feel free to ask me. This is basically all of just as a region of the options in the SPX options between 2,300 2,450, and it gives me an idea of how much hedging it needs to be done by option dealers if the market moves 1%. 1% is 20 points, 24 points. So if the market moves 24 points up or 24 points down, it will force hedging. And notice the hedging that it needs to be done. Notice how these hedging walls appear at a very interesting area between 2,350 and 2,400. And right now, we have been trading in this range. And it's very normal that we trade in this range, because every time we get closer to one of those strikes, the market will bounce off them due to hedging, to the way the hedging is performed. Right now, the market is in a long gamma regime. So in long gamma regime, whenever there is a move towards the hedging walls, it will slow down. So the move will slow down as it approaches. So we are right here, almost at the 2,400 wall. It will take a lot of organic movement to get it past it, but if it gets past it, it will be a very interesting move, because there are no more hedging walls up. This is the 2,425. Notice there is almost nothing here. That means no one is trading options in this area. There are no expectations that the market will be really in this area. So most of the expectations of option traders have been around this region, and that's the region where we had been. We were previously between the 2,350 and 2,375, and now we kind of moved to the upper side. So we'll see if we can finally go over this soon. No, that's kind of the thing that I have. In terms of realized volatility, the picture is more complex. Realized volatility is a tough thing to track right now because it's incredibly low. I have here the SPX. So I think CrossFin also does a good job of showing me realized volatility at different periods. So if you notice, right now we are at around 3%, 3% realized volatility for the last 5 days, 5 trading sessions. This is weekly volatility. This is incredibly low. Super low. We are in super low area of realized volatility. In the past 5 sessions, the market basically didn't move. And it's 3% just because we got a little move up towards the end. And if you notice, if I change this, I'm going to change this to something more like monthly realized volatility. So monthly, we have been on the 7% area for a long time. We have only go up to like 8% here, but 7% has been present for, look at this, you know, as soon as we enter to 2017, look at what happened to monthly realized volatility. Nothing has happened. We had like nice active 2016 with lots of action, and then 2017 is dead. There is nothing happening in realized volatility, guys, and that's kind of concerning to me. There seems to be something that is not normal, and there might be some structural reasons why the market is not moving. And I am investigating these reasons. Hopefully I'll have something to report next week. I'll spend the weekend trying to validate my hypothesis on that. And with that, I think I am done for today, for the first ever live video. Of course, I'll open questions to you guys. If you have questions, just go ahead, fire them. Let me know if you want to know something for next week. Don't be afraid, just type it in the little chat. I have here kind of my summary of what happened with volatility. My hypothesis is that everyone is short variance swaps. That's kind of my hypothesis why realized volatility is so subdued. That it seems to be the favorite trade of big banks and big funds. They are shorting variance swaps, and that's what's keeping the market really subdued. But I don't have definitive proof. Now, if I have proof of that, I'll look for it over the weekend. If I can find something, then we might design a trade to benefit from this. I have a question here. Yes, if we break over 2,400, it's not that the market will accelerate. It's just that the market won't be kind of decelerated. It's the opposite to acceleration. I mean, we're in a long gamma regime. In a long gamma regime, there is no acceleration. The options tend to kind of decelerate the moves. So after 2,400, we won't have that breaking force. So the market will be more free to kind of do whatever it has to do. So right now there is a breaking force at those strikes that you saw. But after 2,400, there is no external force, at least not from the point of options, not from hedging options. So yes, I mean, there could be acceleration. Maybe there could be, if the market goes over 2,400, then the option dealers won't even feel the need to hedge anymore, because they are actually making lots of money on their long calls. So if they don't hedge, then that's it. They just let them run, and yes, the market can just move a little bit higher. But I agree with Avi, and I think that 2,420 will be kind of the end of this move, but it remains to be seen. Any other questions, guys, before we go? Okay, so I guess that's it for the first ever live stream. Thank you very much for those of you watching. It was fun, and I'll put a link to this in some place just in case you're curious and you want to see it. So thank you again, guys. I hope you enjoy your weekend. Take care.